Today, folks, we're going to talk about your comments, your questions this week when it comes to my stock portfolio, the AI bubble that, yes, I still think we're sitting in. I mean, Hank Green did a fabulous job breaking down the circle jerk between the mega cap AI companies. We got to talk about this. A lot of you have been asking me why I don't buy all these other stocks that I think are sitting at great values, like TELUS. Some of you unfortunately pointed out that I've been engaged for a very long time and I'm not married yet. I'm going to explain to you that as well. So if you're on a path to financial independence, if one day you'd like to retire early, join me on that journey, hit the subscribe button, folks, because I just want to firstly start this video off talking about why my portfolio isn't actually down as much as the rest of the market right now, because we are seeing some volatility finally come into play. I mean, Terraform is starting to kind of come back a little bit. There's a little bit more fear in the market, and I like this heading into an earnings season because we know earnings are probably going to be exceptional, and there's nothing better than earnings going up, stock prices coming down, seeing a bit of value compression to alleviate the bubblish broader market fears that I've been hearing across the finfluencer clown world. But regardless, guys, the only reason that I'm crushing is because the Canadian dollar continues to get weaker. And I'm somebody that doesn't understand currency conversion all that well. I don't understand the inflows and outflows of dollar valuations. The only thing I care about is just putting my money with the best possible companies in the world in their own country's denominated dollar value. And as many of you know, over 70% of my portfolio sits in the United States. I opened up US dollar accounts. I invest with US dollars in these ETFs and companies, and there's clearly a benefit to doing so because the Canadian dollar is down another 2% in the last month, bolstering my US dollars by 2%. But keep in mind, there's ebb and flow to this, right? Like, I mean, you go back to March, the summer, and you come in, I mean, the Canadian dollar rallied 6%, which means all of my US dollars dropped in value by 6%. So if I were to convert those currencies in that moment, I would get hurt a little bit, right? Like, but in my path to world domination, I like the idea of wealth preservation over time, and I really like the idea of opening up multiple currency accounts. And I can open up almost any country currency account, right? And I'm thinking about doing another one for Europe because I like the idea of buying Nestle or even British American Tobacco, some of those companies in their own denominated dollar value, just to continue diversifying my currencies and my wealth preservation. And you don't have to be as maniacal as I am about doing so, but I really like the idea of it, and I think it's cool, and it's definitely worked in my favor just focusing on the best companies. But maybe in time we'll see if that truly evolves into my accounts. But regardless, when it comes to these individual stocks, guys, some of you have been pointing out that, like, I'm not buying all these stocks I talk about, yet I talk about so unfavorably to things like TELUS. And why don't I buy TELUS? I keep telling you I think it's trading at its bottoms. I think, you know, it's to lock in at 7-8% yield, you can get your entire return just from the dividend, and if there's any equity upside, that's the cherry on top of the cake. But the reason I don't buy this is my portfolio is like putting together an A team, a football team, whatever you want to call it, right? And every stock I buy has to make a material impact in the total portfolio. And unfortunately, I just don't think there are better companies out there today at scale that I'd be comfortable buying outside of Meta and Google. Meta and Google just trade at cheaper valuations. They're the biggest AI players out there, but they have no AI priced into their stocks, in my opinion, at the current valuations. So I get genomic, editing, self-driving, the Meta glasses, all of that is pure upside from their core fundamental businesses, in my humble opinion, right? And they bring down that overall value of my entire portfolio. And even if I were to buy a little bit of TELUS, it wouldn't be enough to make a material impact on my portfolio. And I'm better off just cost averaging into it through ETFs like VDY. As I mantra on this channel, cost average into the many, focus on the few. It's very hard for a lot of people to do so, as most people end up with 20, 30, 40 stocks in their portfolio, which I think is completely ill-mannered, and it doesn't serve you very well, knowing it's going to lead to underperformance when you could just let indexes carry you and you could focus on the few stocks you think you understand the best. Google and Meta are stocks I think I understand the best. And between my fiance and I, in our combined accounts, Google and Meta make up 15%. They are very sizable individual positions for us, but I'm very comfortable at that, and I'm just leaving them as be. If they drop material, I'd even buy more today. Almost got there, but not quite when they dropped fairly low recently. And some of you pointed out that I keep calling her my fiance. Why? Because we've been engaged for 3 years. I know it's a long time. We're not like the most wedding-oriented people. We're very simple, humble people. We're going to have like a very simple wedding, but we're probably going to have one next year because, like you guys pointing it out in the comment section, imagine our family wondering why we're not married yet. But regardless, I want to talk about the AI bubble, and I want to talk about chip companies and where I think the markets are going in the future, because I know the markets are kind of valued. People keep saying the whole markets are a bubble. I don't think that's the case. The S&P is growing at a 20% clip. A lot of the mega cap companies are growing greatly, but I think we're in a secular bubble that I've discussed on this channel quite a few times, and that secular bubble kind of rotates around a handful of companies. And I'll just introduce you to this video, but I'm going to kind of summarize it because it takes too long to get to the point.
I love a good graphical representation of reality. Now, they're never perfect. There's always data that's being left out, but I'm going to talk today about one that contains a lot of information and took a little bit of time for me to parse. So once I did, it kind of terrified me. I'm going to show it to you as well. What a good little visualization we have on our hands here. How Nvidia and OpenAI fuel the AI money machine. So very quickly, to explain, Nvidia...
I will explain for you, don't worry. Essentially, as many of you know, or maybe you don't, Nvidia's revenue, half of it is only coming from 3 or 4 companies. 3 and 4 companies that are building massive AI cloud data centers are responsible for the vast majority of Nvidia's revenue. And Nvidia has money coming in from a variety of other companies as well. Now, what Nvidia has done is they take that money from these other companies, which, by the way, gets added to their net income and their revenue, which you think, yeah, that's normal. But if Google, Meta, Amazon make money from us, retail, they post it as net income and revenue to their balance sheet, then they take that net income and they give it to Nvidia, and Nvidia is posting that to their balance sheet, and then Nvidia is taking some of that money and reinvesting it into other companies like xAI, Figure AI, and all these other companies that are buying chips from them. It's this kind of weird circle jerk motion, right? Like OpenAI, Nvidia, Microsoft, like these companies are buying a lot of chips from Nvidia, but Nvidia is also reinvesting that money that these companies are giving to them back into those companies. And my speculation on this is that in the future, guys, there will not be as much demand for Nvidia chips as there is today. I just don't think that's going to be the case. 3 to 5 years from now, I think we'll reach parity with these data centers at some point. And unless Nvidia has some crazy innovation, or I can't believe that this is going to go on forever. It's just not. It's like the gold rush with selling the picks to the miners, right? Like eventually that comes to its bitter end. And I think Nvidia is trying to invest in some of these companies at hopes that in the future there'll be a massive value add to the economy that Nvidia will get some tail upside on in the future, right? Because regardless about how you feel about AI today, guys, it isn't materially adding as much value to the economy as it has added value to these handful of companies. Like, I mean, it has added trillions of dollars. Like Nvidia is a $4 trillion company, guys. And this massive growth rate is coming from mega cap companies and their revenue is just coming from us, not from the actual AI itself as it stands today. So it is quite concerning, and it's something that I just don't think is materially going to last into the future, which is why I wanted to focus my portfolio on alleviating away from this crazy growth rate that chips have gone on. Now, it could last for another few years. Who knows? I don't know when it comes to an end, but I think Google and Meta are like the only 2 companies that have none of this priced in. I mean, Microsoft is trading at like a 40 times. Apple's like a 40 times. Nvidia is a 50 times multiple. And people keep saying, oh, it's cheap. Look at the forward valuations. And yes, Nvidia is trading at like a 20 times, somewhere in the 20s next year. But that doesn't matter if you look at, like, again, an example of the crypto boom back in 2021. Everyone was buying Nvidia chips to mine crypto, but eventually that bubble burst. It came to an end, and people stopped buying chips, and their revenue dropped like 20%. Nvidia is a very cyclical business, and I think it's going to continue to be cyclical in the future. So the valuations don't really matter when it's not retail making up all the revenue. And if 2 companies say, hey, we're done buying at the level we're buying, I mean, this revenue could drop precipitously and the valuation could jump up dramatically, which means people would likely sell the stock off quite materially, and it could drop massively like it did during the crypto bust, right? I mean, Nvidia dropped 60%. That future is probably going to happen again at some point, right? And I don't think that's going to bring down the entire market. I think the market could go through a bit of a cyclical, like it could go through a correctional period, but because it's so concentrated in a handful of companies, I think those companies, and I've said this, I think Palantir, I think there's a lot of companies out there that are drastically more expensive than they should be today. Those companies might correct, but that's not the whole market, right? Because I just don't think Google, Meta, there's a lot of companies out there today that, you know, the lower half of the S&P that are still going to be going through some great valuation, you know, growth. I think they're going to see margin expansion as AI starts to permeate into the markets. It just hasn't permeated enough today to justify these companies' values. These are just my opinions. One of my biggest regrets in the market, don't get me wrong, was I bought TSMC and then I sold it because Warren Buffett sold it. I don't know why I fear-mongered my way out of this. It was one of my biggest regrets, missing this crazy chip boom. And I mean, we just saw TSM's numbers. They crushed. Their net income was up 39%. We know these companies are going to crush. So in the meantime, I hope the markets continue to correct. I love buying discounts out there. But the crazy thing to me is the dollar, like my portfolio's hardly moved this week. Top to bottom now, I think the Canadian dollar is down about 3.2%, guys. So I'm looking at my portfolio and it feels like a savings account because I see this crazy volatile mood swings, yet my portfolio is mostly stable thanks to the onslaught of the Canadian dollar deteriorating. But this is just kind of what I'm looking at here this week. Portfolio sitting at 526K. I'm right now mostly just stacking cash. I told you guys I'm kind of like in this ebb and flow where if the markets do these insane value bumps, I'm mostly just putting money toward my mortgage. Don't get me wrong, I'm still adding money to my investment accounts. It's just not as material as it was a little while ago. Though I did do some good buys and some adjustments recently, as many of you know. I kind of sold down the S&P, sold a little bit more off Google, bought some XEQT there. I wouldn't mind making VDY XEQT closer to about 40 to 50%. Time will tell, but that's where most of my money's going right now. But I'll pass the question off to you. What are you buying? How do you feel about these markets? Do you think AI is a bubble? I'd love to hear about all of it down in that comment section below.